In this video, I'll introduce to you a proprietary trend trading indicator that will help us on this channel know if we're in a bull market, bear market, or somewhere in between. We'll look at the performance of Bitcoin during these three regions to determine if there's any advantages to this strategy. So stay tuned. In our last video, which I'll link up above, we looked at the performance of Bitcoin above and below the 200-day simple moving average. We saw great results above the 200 SMA and pretty poor results below, which is good, so we know when to trade. In this video, we'll take it a step further and look at the performance of Bitcoin with above the 200 SMA plus a volatility band above it and then a volatility band below it. So then we have three regions to look at: bull, neutral, and bear. The volatility bands were placed above and below the 200 SMA so that approximately 1/3 of the time was above the bull region, about 1/3 in the neutral region, and 1/3 in the bear region. This is so we have sufficient data and sample size to determine the average expectancy within each period. Just like the last video, we'll look at the 9-year history of Bitcoin, the last 9 years. Then we'll look at the last 5 years to see if the expectancy has diminished over time. And then we'll take it one step further and look at the last 2 years. Within each region, we'll look at the exposure. So how long the Bitcoin was in each region, the return at the end of the period. So if you only traded in the bull region, what would be your return at the end of the period? Same thing with neutral and bear. And my favorite is look at the expectancy, which is what rate of return per day could you expect in each region. So let's jump into the charts and then head into the data. So this is a visual of our magic indicator. This is the lens at which we'll analyze the market from now on. We'll also exploit momentum on smaller time frames, but this will be the main indicator to give the smaller time frames an idea if it's a bull market, bear market, or just time to chillax a little bit and stay in the neutral territory. So looking at the charts here, you could see the bull region is the green region right here. So when we're above this 200 SMA plus the upper volatility band, when we're above this, we are in bull territory. You can see in this region that we tend to, when we get above it, we tend to just rip up. In the neutral market, it seems to be a little bit more of choppy price action. No real trend or direction. It's just uncertain of where to go. So quite a little bit choppy. And in the bear region, you could see that when we're below the lower volatility band, we are in a downtrend and a bear market. We can go back in time a little bit, back to the 2017 bull market, and it's the same idea. We would have rode this from basically from $260 in 2015 and rode the upper band all the way until about $10,000 in 2018. Then it would have sold and started to short, or at least leave the market and go into USDT or some other stablecoin. It would have done that from 8,500 down to 4,000. Then it reached the neutral territory. Then it would have bought again at 5,000, sold up at 9,000. Now that you have a visual, we can jump into the statistics on how Bitcoin has performed with this indicator over time. I will try to put the table right here. And looking at that, you could see the exposure is approximately 1/3 in the bull, bear, and neutral territory, with about 1,000 days in each period. Looking at the returns now, in the bull period, you would have had about a 5,000% return over the past 9 years. So 50 times your money if you just bought and held during the bull period. During the neutral period, you would have had about 140% return. Still good, but obviously nothing close to 5 times your money. And in the bear market region, even though you would have spent 1,000 days in the market during a Bitcoin frenzy, you would have lost over 60% of your money. The expectancy over the last 9 years is what I really want you to look at. And you could see that the performance of Bitcoin in the bull market territory was about 0.34% per day. So if you only traded during the bull period, you would have made on average 0.34% per day compounded, and 0.09% during the neutral period, and negative 0.09 during the bear period. Looking at the last 5 years now, you could see that the performance looks pretty similar to the last 9 years, with an extreme outperformance during the bull period at a 0.42, about 0.5% per day for every day that you're above the 200-day SMA plus the upper volatility band. So the green region, or the bull region in our case. During the neutral region, it would have been a 0.03%, so slightly positive. And during the bear period, it would have been negative 0.12% per day. Moving on quickly to the last 2 years, you could see a similar pattern here, where extreme outperformance during the bull period, and surprisingly, it's actually a negative return during the neutral region, and even more negative during the red region. Overall, I'm very happy with these results, not just the absolute performance, but the relationship of the indicator over time. If we saw a huge tapering down of the expectancy in the bull market, then I would be a little bit cautious of using this indicator and strategy at all, but the performance seems to hold up very well over time. As I mentioned, trend tokens will exploit this indicator, which is a DeFi asset management protocol on the BNB chain, which will allow you to gain exposure to a dual momentum system acting on a portfolio of assets. So if that sounds interesting to you, then make sure to subscribe to the channel for updates, as in the upcoming videos, I will be introducing these trend tokens to everyone. So thanks for watching, and I'll see you in the next video.